Hello viewers, Tim Paul here on the Huddle, and I'm with Soo Kim, chairman at Bally's. Thank you for joining me.
Tim, thanks for having me.
So, plenty to talk about at Bally's, plenty of kind of change. In terms of the setup with the post-merger with Intralot, how are you looking at kind of functioning and operating in all the different kind of markets and verticals that entails?
Well, actually, it was a decomplexifier for us. Prior to that, all was sort of part of Bally's, and then we had Intralot as a separate investment on the side. We felt like it made sense for Intralot and our online gaming operations to come together. There's a little bit of there's more congruence there. And look, I think that those are areas that have growth, both of them, right? So I think that they're historically Intralot was an innovative share-taking lottery services provider, but just ran into a bad balance sheet, rough markets, and had a bad balance sheet for a decade. And so now it's the best balance sheet of the major operators. We have the best balance sheet now. And so I think that allows us to compete for much larger contracts. I think we've always had good technology. You pair that technology with some capital, and so we see growth in new contracts, new markets, new products on the Intralot side. And then on the Bally side, or the Bally Gamesys side, look, obviously online gaming is growing, and we wanted to give that entity, especially as we had completed a go private on the Bally side, where we took away our currency. We wanted to, on the online side, we frankly wanted that business to grow both organically, new markets, growing markets, but also grow inorganically, potentially through acquisitions and mergers. And so we wanted to make sure that that entity had its own currency. So the transaction of merging Bally's and Intralot, listing it in Athens, which now has currently a 2 billion euro market cap, that's a nice sized company. We have hundreds of millions of free cash flow. That entity can now go on and start to scale. I think it's traded well. It could be trading better. However, obviously we ran into somewhat of a unpleasant news of the UK raising the gaming tax rates. But look, we very much believe that lemons should always be made into lemonade, and really the rising of taxes, what it does is it forces the shifting of a market to consolidate into fewer larger operators. That's the natural capital markets reaction to tax rates. And so ultimately, I think that's actually congruent with our own strategic objectives. So now, frankly, when we first went into it, we probably were looking to diversify ourselves away from the UK. But right now, I think we're also looking at the UK as well to see if there aren't opportunities to scale when I think many of the operators are going to start pulling back.
Okay, I'll pick up on the UK point, if you will, because it's something that obviously has come up a lot throughout the week, and will do in meetings today and tomorrow, for example, with the Betting Gaming Council CEO.
Yeah.
I mean, that's what you've just said there is perhaps the most kind of positive take that I've perhaps heard on the UK situation so far.
It'll find a level. I'm not saying that more taxes is better. I'm not saying that, but I will say that it's a forcing function that makes it so that fewer operators can operate on the margin. It forces people to have to achieve a certain scale, otherwise they just exit. And we've already achieved that scale. So it'll actually decrease competition, which increases margins, which is an offset to the decreasing margins of the taxes. But here's the key, and I think this is where this is the challenge to the regulators. There's really two challenges. The first one is that the UK has gotten to a very large and meaningful online gaming business by being on the forefront of regulation. It was the first regulated market. And that spirit of innovation has to be recaptured. And, there's lots of different things that the UK can do to continue to grow the pie. If you're going to keep raising the taxes on the pie, you also have to grow the pie. And so I think that, for example, like, why isn't there a legal regulated cryptocurrency casino, especially in a world where the US has passed stablecoin legislation? There's no reason why it's now legal in the US banking system, why we can't have some level of crypto convenience for our customers, which frankly, has been so far limited to offshore operators. And that's actually, you don't want all the innovation coming from offshore. When you're pushing tax rates, you have to allow for innovation to come and grow the market inside the box. And that leads me to my final point, which is again another sort of challenge for the regulators. They have to enforce what it is, on-sites regulated gaming. They have to make sure that the black market operators, black market content providers are not operating. Otherwise, it's not fair, right? Because there's so many incentives to operate these businesses with no taxes, with no regulations, no responsible gaming, but we regulated operators have embraced this business, so we don't do that. We're going to work together, generate non-tax revenues, be regulated. The regulators have to come and work with us on that and make sure that gets closed off. So, because the problem with raising taxes is that there's more incentive to not pay them.
Yeah, we interviewed the Gambling Commission CEO recently, and the black market obviously came up, but we didn't discuss perhaps a legal crypto license. So that's perhaps next time I discuss with him something that I can put forward.
I think something that again, it's really about keeping with the spirit of innovation and moving forward. Plus really regulating, making sure that everyone's following the rules. Those were to be two major palliatives to make that the bitter pill of just higher taxes worth it, because we're paying for that.
In terms of your position in the market, so you outlined the thinking and the benefits behind the deals with Intralot, but there have been a few high-profile mergers recently, also between kind of lottery and casino. You've got Allwyn have made some significant moves recently.
Sure, yeah.
Flutter and CSAL a couple of years back, and even you've got DraftKings going with Jackpocket.
Sure.
In terms of
well, I think that's a thing.
Yeah.
I think that's a thing.
Yeah. In terms of competing with, you've made some shrewd moves, but so have others.
Yeah.
Where do you see yourself within kind of that landscape of the market?
Well, that's a great question. We have always, and I do think that the market has accepted the combination of online and lottery. Yeah. And so we weren't the first, and so we were sort of following that trodden ground. But look, I have a slightly different philosophy in the sense that we embrace gaming in all its forms. And so we like physical gaming, casinos, distributed gaming. We like sports betting, iCasino. We like lotteries. All these businesses rhyme. They meet their customers with slightly different customer experiences and products, but similar. They're all similar. Yeah. They're all highly regulated, and they need to be. So, look, we like this business in all its forms. We're going to continue to grow out each of these businesses, and I am not surprised that over time they start to converge.
Notably, you mentioned the different verticals. You're big on land-based as well.
Oh yeah,
yeah. And we've had. I want to ask you about New York, but first I want to ask you about Star Entertainment, because obviously there's a huge period of change. Talk us through the way you've kind of gone in and said what it looks from the outside that you've said, right, here's how it was working, here's how it's going to work.
That's exactly it. It's actually not that hard than that, The reality is it's been in essentially a government receivership, and the government doesn't really know what they're doing. That's why commercial actors come in and partner, public-private partnership, to give that commercial motivation, the impetus to seek profits but do it the right way. And so we see a huge opportunity to restore credibility in what is an amazing market. Sydney, 6 million people, 9 million people in the state, growing nicely. Brisbane, 3 million people, same thing. 5 or 6 in the state, growing nicely. Brisbane's going to host the Olympics in a few years. I mean, these are world-class cities. And so the first, third, and fifth largest, including the Gold Coast, cities of Australia running large casinos with limited competition and reasonable tax rates, there's no reason why these things can't make a lot of money. And look, we just happen to be the operator we'll be the only casino in the third largest city in America, Chicago, and one of the few casinos in New York. So, I think there's a little bit of symmetry in that, Maybe we ought to pick something out in London, just to say we did,
Why not? When it comes to, we mentioned the New York license as well. You spoke with kind of high hopes there about the Australia, despite kind of past challenges, but you've outlined why there's an opportunity there.
Yeah.
What are your overall thoughts looking into New York and
it's the same thing. New York is going to be amazing. Look, if you look at we're very much into just basic blocking, tackling, quantitative analysis. Between the 3 operators in New York, there'll be something like, let's say, 20,000 gaming positions, plus or minus. That serves a population of 15 million. That's a great ratio. That's a great ratio. Again, I think New South Wales has something like 70,000 gaming positions or maybe more for, again, 9 million people. Illinois has 11.5 million people and they have 90,000 game machines. I think actually New South Wales over 100. Actually, sorry, my math is. And so just the arithmetic of number of positions per population, there's nothing like New York, and we're pretty excited about that.
Yeah, interesting breakdown there. For a final word, we've discussed kind of already in a short space of time a number of verticals, but if you were to pick out kind of one industry-wide trend, I don't know if it's going to be prediction markets, that's something we talk about a lot, but something that you think is going to really change or take off this year, something that perhaps, without revealing any investment secrets, that you might have your eye on next, perhaps.
Look, it's funny. We like gaming in all its forms, but regulated, licensed, and so obviously casinos, online gaming, and lottery gaming. It's a really interesting question. I don't have much to say about prediction. We're not involved, and maybe that says a lot. I think there continues to be more evolution across all 3 and coming together of those. Like, for example, historically, lotteries didn't want customer data. Even though the lottery is the most, in some ways, demographically accepted form of gambling. Yeah, biggest audience, in some countries, half the country plays lottery. My wife is Swedish. I was just spent the holidays in Sweden. Turn on the TV and you're playing Svenska Spel with you're the entire country picking bingo balls, and it's just part of the culture. In Spain, we have the El Gordo, right? And I think that level of democratization of lottery gaming, and whether it's iGaming, casino gaming, that feels like that has to come together. That level of sort of really small consumer-facing, entertaining. And really, the stakes are low. So it's even though the odds are published bad, but it's fun. And so I think that trend. I think it's interesting that you see that the online game operators are investing in lottery. I see we're invested in lottery. We're glad that we have the 3rd largest lottery platform. I like that pathway. I see a lot of potential. Like when it comes to Swedes predictions, and that's a different area of they're innovative, but is it more regulatory innovation or product innovation? I think it might be more the latter. The products are the same, So anyway, it's I have less to say about that.
Okay, but interesting certainly to hear that the focus on lottery and is almost one of the most traditional or historic products we have, but there's still...
Exactly. But in terms of the amount of innovation, the amount of customer data, we're not scratching the surface. We're not even touching. And that's why, if I think about where the puck might be going, that's a really fun area to explore.
Absolutely. Well, Soo Kim, thank you very much for your time.
Thank you.
Fantastic to speak with you. And
all right.
Good luck for 2026.
Thank you, sir.